When it comes to investing, one of the best and easiest ways to diversify your portfolio is by investing in an ETF or an exchange traded fund. Think of an ETF as a basket of stocks. If you invest in an ETF that tracks the S&P 500, you own a little Apple, you own a little Microsoft, a little Nvidia, a little Tesla, and so on and so forth. In all, you own a little bit of 500 of the best US companies. So with that being said, in the past, we've done a few different ranking videos where we've ranked REITs, we've ranked dividend growth stocks, and other videos. But today, we're going to focus just on ETFs and take a look at 5 different ETFs, ranking them from the highest quality to the lowest quality. But before we begin, do me a huge favor and click that like button down below. Subscribe to the channel so you're notified anytime we drop new content. I really appreciate it as it really helps the growth of this channel moving forward. So with that being said, let's jump into it. Hey everyone, Mark Roustan here, back for another video. As always, I'm a CPA and not a financial advisor, so please perform your own due diligence. And before we begin, let me take a moment to introduce today's video sponsor, which is Webull. This is a very unique and exciting company. Have you ever wanted to invest in a particular ETF, but there's a specific stock or a few stocks that you wish were included or excluded in that ETF? Well, that's where Webull comes in, and you can do it all through utilizing their AI tool. Let me give you an example. An ETF we talk a lot about on this channel is SCHD. But let's say you're not crazy about having 3M included in SCHD. Due to the large settlement they have to pay over the next few years and the limited growth prospects, you can create an SCHD ETF and exclude 3M from the ETF. Here's another example. Let's say you were high on the EV market, but maybe you already have a high exposure rate to Tesla. You can build an ETF with EV companies without Tesla included. You can create your own themes and become the architect of your own ETF. As you create your themes, you can simply click the stocks in or out of your ETF as you build your idea. This is not only a great idea, but it can be an amazing investing tool, as I have gone through ETFs for years and often say, man, I wish that stock or those stocks were not included for one reason or another. Webull solves all of that for me, and it can do it for you for a low cost of just $5 per month. Give Webull a try by downloading the Webull app on the Apple App Store or Google Play for non-iPhone users. You can also check out the link down in the description below. Now let's get back to our video where we're going to be ranking 5 popular ETFs from the highest quality to the lowest quality. But before we begin, let me remind you of our ranking system here. The highest ranking I call a must-own, and these are what I consider the very best ETFs. Next on our list is high quality. These are going to be fantastic ETFs, but not ones I consider a must-own, so just a notch below that tier. Next, we have like, but not love. These ETFs are decent, but there are better options available, at least for me. And then lastly, we have the prefer not to own ranking. This one really speaks for itself, as I do not like this ETF for my particular portfolio. Now let me set you up by showing you the 5 ETFs that we're going to be going through today. They are SCHD, of course, QQQ, VOO, JEPI, and VNQ. So let's get started beginning with ETF number 1, which is VOO, or the Vanguard S&P 500 ETF. This is not only one of the most popular, but one of the largest ETFs on the market today. There's a whole variety of different S&P 500 type ETFs, but they're just really issued by different brokerages. Vanguard has theirs with VOO. You have the SPY and IVV, all 3 tracking the S&P 500. VOO is up nearly 9% over the past 12 months, and given the fact that they track the S&P 500, which is only updated once per quarter, it is a very hands-off ETF, making it a low-cost option with an expense fee of just 0.03%. VOO has $337 billion in assets under management. Given that the S&P 500 is a very broad index made up of 500 companies, some of the best companies here in the US, you can expect a broad range when you look at the sector breakdown. But as we've seen, the technology sector has really hummed here in 2023 and is taking a larger share of the S&P 500. Let's have a look at that sector breakdown. As you can see here, technology makes up 29% of VOO, followed by healthcare, financials, consumer cyclical, and communication rounding out the top 5 sectors. Now let's take a look at the top 10 holdings, which include Apple, Microsoft, Amazon, Nvidia, Alphabet, both Class A and C shares, Tesla, Meta Platforms, Berkshire, and United Health. The top holdings account for 30% of the ETF, and in totality, they have 509 total positions within VOO. So now let's turn our attention and see where I would rank VOO. After all, VOO is what I like to call a foundational position. As such, I couldn't rank it anywhere else than a must-own ETF. The S&P 500 is a staple of any portfolio, and as I mentioned, a foundational position. In fact, it is my largest position within my portfolio. ETF number 2 is SCHD, which is the Schwab US Dividend Equity ETF. This is the most popular dividend ETF amongst dividend investors. The reason being, it checks off a lot of boxes. SCHD, outside of 2023, usually offers you some growth potential. It offers you a solid dividend yield, as well as strong dividend growth. The ETF is flat over the past 12 months, largely due to their lack of technology support. It's not that SCHD doesn't have technology exposure, but it's due to the fact that the ETF is very broad. Like VOO, SCHD is also a low-cost ETF with a low expense ratio of just 0.06%. SCHD has $49 billion in assets under management. Here's a look at the broad sector breakdown I was referring to. The top 10 sectors include industrials, healthcare, financials, consumer defensive, and technology, all grouped pretty tightly together, accounting for between 12 and 18% exposure. The top 10 holdings include Cisco Systems, Amgen, AbbVie, The Home Depot, Broadcom, Chevron, Merck & Company, PepsiCo, Coca-Cola, and Verizon Communications. These top 10 holdings account for 41% of SCHD, and in totality, the ETF has 106 total positions. Now, when it comes to ranking this ETF, it is another example of an extremely high-quality ETF and one of my larger positions within my portfolio. And in my opinion, given how broad the ETF is and how solid the dividend yield is combined with strong dividend growth, I like how SCHD combines with VOO. So I would also rank it a must-own. Now moving on to ETF number 3, which is JEPI, or the JP Morgan Equity Premium Income ETF. When it comes to dividends, there's a multitude of different ways you can go. You can look at dividend growth, low yield, or you can be an investor that's really looking for income or that high yield investment. That's exactly what JEPI offers. I have done a lot of prior videos which show the structure behind JEPI and how they're able to pay out such a high yield by utilizing options. Now, I sell options on a monthly and weekly basis myself, and there's really some upside that's capped when you invest in something like JEPI. However, if you're just looking for income, short-term income, JEPI can be a great option for you. Over the past 12 months, the ETF is down 2%. JEPI has $29 billion in assets under management, which has increased quickly due to its popularity having only been around for 3 years. Given that the ETF is actively managed with all the options that go on, JEPI does have a much higher expense ratio of 0.35%. So that should be taken into account before investing. Here's a look at the sector breakdown. The top 5 sectors include technology, healthcare, industrials, consumer defensive, financials. The ETF sells options, but it also owns underlying positions as well. And the top 10 positions include Amazon, Adobe, MasterCard, Microsoft, Intuit, Accenture, Visa, Progressive Corp, Eaton Corp, and Eli Lilly. These top 10 holdings account for only 15%, and JEPI has 138 total positions. In terms of ranking, it really comes down to whether you are looking for income or not. Short term and looking for income, I could see why you would like JEPI. However, for me, I already sell options on a regular basis, and I'm not looking for that high dividend income to add to that, which is why I personally, for me and my portfolio, I rank the ETF as a prefer not to own ETF. Some people like it, but it's not for everyone. ETF number 4 is the Invesco QQQ ETF. We've mentioned technology and the importance of having the exposure to the technology sector already a lot on this video. Those ETFs with high exposure to technology are likely outperforming here in 2023. And if you're unfamiliar with the Invesco or the triple Qs, like a lot of people like to call them, this ETF is heavily skewed towards that sector. It tracks the NASDAQ 100 index. Over the past 12 months, QQQ is up 21% as the tech sector, along with the communication services sector, have been the 2 best performing sectors to date. The triple Qs have $202 billion in assets under management, as it is one of the most popular ETFs on the market today. Let's take a look at that sector breakdown. As I mentioned, the Nasdaq is very tech heavy, and here you can see that, as QQQ has nearly a 50% exposure to that technology sector, followed by 15.5% to the communication services, which is one reason the Qs have performed so well in 2023. The next largest sectors include consumer cyclical, healthcare, and consumer defensive, rounding out the top 5. Now let's take a look at the top holdings, and as you can imagine, the top 10 is filled with technology companies. Apple and Microsoft lead the way with nearly 20% exposure between the two companies. They are then followed by Amazon, Nvidia, Meta Platforms, Alphabet, Tesla, Broadcom, and Adobe. These top 10 holdings account for 48% of the entire fund, and the fund has a total of 102 total positions. So where do we rank QQQ? As you know, if you've watched any of my prior videos, you know that I love investing in dividend stocks, but that doesn't mean I ignore growth stocks. I use QQQ on a weekly basis to sell cash secured puts. It's one of those ETFs that I don't mind buying if it drops, but if it doesn't, I continue to collect the premium on it. As such, I'm going to rank QQQ in the high quality category. I do not give it the must own because it has a lot of the top positions you can get with VOO. Already, it's just not as large of an exposure, but a high quality ETF nonetheless. Are you new to investing or looking for a new brokerage account? Then definitely check out Webull. Right now, you can get up to 12 free stocks valued up to over $30,000 just for signing up for a new account and depositing any amount of money. Check out the link down in the description below. ETF number 5 on our list is VNQ, which is the Vanguard Real Estate ETF. We've now moved away from technology and we're into a sector, real estate, that hasn't really been represented at all within any of the other 4 ETFs that we've covered so far. So if you're looking for specific exposure to the real estate sector, or REITs more specifically, then this is one of the most popular REIT ETFs on the market today. Over the past 12 months, the ETF is down nearly 15%, largely due to higher interest rates, which has put pressure on the sector as a whole. VNQ has assets under management of $32 billion with an expense ratio of 0.12%. REITs tend to pay higher dividend yields, and as you can see here, investors in VNQ earn a 4.6% dividend. The sector breakdown should be pretty self-explanatory, as nearly the entire ETF is dedicated to real estate. Here's a look at the ETF's top holdings. The Vanguard Real Estate Index makes up 12.5%, and that index is already made up of a lot of the top names already on this list. The top individual REITs include Prologis, American Tower, Equinix, Crown Castle, Public Storage, Realty Income, Simon Property Group, Welltower, and Digital Realty Trust. The top 10 holdings account for 47% of VNQ, and the ETF has a total of 168 positions. When it comes to real estate and the REIT sector specifically, there's a ton of different REITs that are out there. You can have apartment REITs, retail REITs, data center REITs, storage REITs, logistics REITs, and the list goes on. There's a lot of really high quality REITs in this sector, but there's also a few ho-hum type sectors. This is where it'd be a great idea to have something like Webull, where you can create your own REIT-specific ETF, which is essentially what I've been doing. I like to invest in 10 to 15 of the highest quality REITs. I don't want to do anything with the lower quality REITs. I just want those high quality REITs, and I can do that by using a tool like Webull. As such, given that I'm only looking for exposure to 10 to 15 of the best performing and highest quality REITs, therefore I'm going to rank VNQ, and it's just for me personally, in the like but don't love category. If you want REIT exposure, this can be a solid ETF. But like I said, I'm just looking for those top 10 REITs. So for me personally, I don't want much exposure to those other REITs. So again, that is just my take. So there we have gone through 5 different ETFs. We just did VNQ, which is a REIT ETF. We looked at QQQ, which is more technology heavy, but still a little bit broad. We have SCHD, one of the most popular dividend ETFs, VOO, which is an S&P 500 ETF. And then we looked at one of the most popular high yield ETFs, which is JEPI, which has just hit the ground running here in its first 3 years of inception. So if you haven't done so yet, make sure you smash that like button down below. And in the comment section, let me know which of these 5 REITs do you like best, And how would you rank these 5 ETFs? Thanks again for watching. I hope you enjoyed today's video. And with that being said, we'll see you in the next video. Take care.